Good morning, Green Robe. Hope everybody had a fantastic holiday, time with family. And we can start to recuperate and get ready for the new year. So, is this a late Santa Claus rally possibly coming here in a broken market? Well, we've got a bottoming tail here, but it's a little after 9 o'clock, so we're going to see if this can end the day with such. Our market internals will take a look at them. They are cooked beyond recognition at extreme. Historically, markets have always bounced from such levels. So a counter trend, a bounce from here seems pretty likely, and we'll see how far it can get in the last few days of the year here. But as we always do, we keep it in perspective. We look at the charts objectively. And so what we have here, as you can see in the futures, a steady flow to the downside. And we see that the ranges began to expand. And we know when we see range expansion after multiple days moving one direction, that you have now the majorities in agreement, finally, right, that it's going down. So when a move begins to move lower, and we call, an igniting move, and this is really not a huge bar here to say it's an igniting move, but we had some topping tails right at the 20, a bottoming tail here that didn't follow through, and then saying, hey, the sellers are just continuing to step up here, and then the move down, and then, sellers just fell over themselves just to get out. So we have now a capitulation type of a bars here as the range expanded, ending move. However, this is not the end of this move. We can be sure of that, meaning this is not over, as it's going to go lower from here. And we get into the weekly charts and monthly charts and all that, but to get a bounce at this point makes sense based on the internals being to the extreme they have. And the breadth internal has reached an extreme where I can't remember a time that the markets hadn't had stabilization and a bounce, and always had a lower low retest afterwards. Now, that all being said, I can't remember a market, and looking at several decades of information, where the top basically came in without much of a warning. No inverted yield curve, no real way extreme in market internals. I mean, they got somewhat extreme, but it wasn't to the point that it suggested what's happened. So it's a little bit different this time. I think we've got more to come, but right now, let's see what's going to happen over the next few days. So when we get wide range bars, that means that there's a momentum move in a smaller time frame. So we see how prices got extended lower here, and that creates a price void. And now we've got this counter trend move. These bars right here are the bottoming tail bar. So ideally, from a swing trading perspective, we'd like to see this bar in place, meaning prices have closed. At the end of the day, we're going to see a bar like this, or even a stronger one that pushes deeper into this red bar. For swing trades, well, this would be like a semi type of climactic swing. So you get a small move and then a retest. Much bigger moves happen on the retest, and then you get a bar like that. We're far from that right now. So right now, just look at things pretty much from an intraday trading point of view for the moment until we have more information, which will be later in the day, to maybe conclude that, hey, this is going to close with a positive bar, a bullish bar. Before the holiday, we had some bars like this earlier in the day, and they didn't look like this at the end of the day at all. So you cannot count on a daily bar looking like whatever it looks like, say at this time of the day, or even 10 o'clock or 12 o'clock, as to what it's going to look like at 4 o'clock. And it's easy to think that in the moment, because things look, in this case, positive, and you might think, well, I better get on board. Well, you better make sure that's in alignment with your trading plan that you're anticipating, or the depth of retracement into the prior bar is a stronger indication that it'll close that way. So there are different ways a positive bar can form that can lead to the probability that it will close that way. So we'll see. Hourly, still in a downtrend, but it's got room to get to this resistance area that it fell from. So we'll see how far this gets. Ideally, I would like to see this come in at the open, meaning it pull back, make a higher low, maybe retest this area, and then I have some evidence that there's more stabilization. And it doesn't have to necessarily happen on the 60-minute chart, but I'll be looking at the 5 and the 15 and just seeing how this progresses. I'm going to be looking at a lot of individual stocks as well, but it could just rip right up because, it's so extended like this, and it could just push right up into that area, which will make it more difficult to get on board. So we'll see, but I'll be looking at smaller timeframes as well, looking at bar by bar analysis and, what we do as to, can prices keep going? Can we get on the moving train? That's something we covered in one of the MT Lives a week or so ago. So, by the way, we're having an MT Live today. If you don't have the link, let us know. And it'll be on YouTube as well. So those of you that are on YouTube, log in there around 12 o'clock and we'll be there. So let's see where these other markets are at. And kind of the same thing, right? Downtrend. Good morning. Downtrend. Bottoming tail bar. Just repeating, it's, too early in the day to count on this looking like this. This could be another red bar by the end of the day. We'll see. 60 minutes in a downtrend. We do not have multiple time frame alignment. We've just got prices a bit extended to the downside. Internals are pretty cooked, which historically where things have bounced. So we shall see. Dow, same thing. I actually like this a bit better. Just because of the size of this range. It pushed through 22,000. And so whatever my lines are pointing to, there must be something over there to the left. So we're in an area of support, bottoming tail bar, counter trend move. Again, hourly is in a downtrend. So nothing here to suggest that this is some type of significant bottom. Right? This is a bounce scenario. And this kind of vertical move to the downside, well, climactic, it's extremely rare to see a kind of move that rallies back up. I can't even remember one. I'm not saying that there never was one, but this is typical where it hits, and the 20 MA is pretty far. It either hits a whole number, this is where people start looking at Fibonacci retracements and saying, oh, this is a retracement level. But in essence, just, you look at your hourly chart and say, look, this is where there's some stabilization. If it's going to bounce, the depth, if it could get from here to here, that should be about the extent of where it's going to get. You got some overlapping bars over here, but just look at your charts from this perspective. And if you don't have the futures, just, you look at the spiders, and it's, this is showing the 24-hour time frame there, but, the same kind of thing where you look at where there's some overlapping bars, where it might bounce up to, and then you just use that as your guide, right? Qs, spiders, the Russell, and you can see everything is still in a downtrend here. A little bit of stabilization with 126. Not even that deep into that red bar. So not very strong here. pre-market. Transports just, been crushed. The extent of the move in a short period of time is a bit surprising. And where else we got? Bonds down a little bit, but still in an uptrend. So interest rates have been coming down, which has been bringing the yield curve closer and closer to inversion. And with the Fed saying they're going to continue to raise interest rates, that seems like a definite that it'll happen. Meaning if they do continue to raise those interest rates, well, the yield curves will get inverted. And, this bear market that we're having now will go on for a while. Oil, no love there, a little bit of stabilization. It tried to hold the $50 area, and it's continued to go down. Another bearish view here for none of the markets, the economy, as to all these great numbers that have been coming out of late. And then to see oil collapse like this, to see interest rates collapse, not total collapse, but big drop as they've had, are suggestive of a slowing economy or the fear thereof. And of course, gold going up here, it just doesn't make sense that gold is going up based on looking at it from an inflation point of view. But, like I said, maybe time of year, seasonality, whatever. It doesn't make sense to me yet. We shall see. Internals, you can see them here. 318, that's a very extreme number. I have seen 320 something. I mean, just going back a lot of years, but market has always bounced from a number of a minus 300, and sentiment is just pushed down through the 1.2 level, which historically is an extreme level, a lot of put buying, and this moving average is down here near 1.4. So a lot of fear there, and these two internals are in alignment with each other, suggesting prices can move and should move up. And let's just take a look at the VIX here. And so this peak up here, that's pretty far away. And if this is suggestive that it would go up to this level, as you look at this just like you would in the other chart, that would suggest there's a lot more pain coming in the market here. But this $40 level, if we do get more sell-off, I've got an alert for myself just below this $40 level to be aware of that. Just go back to the daily chart here, just to see how this went up. So you can see that tail right there is just above 40. Or just like we get wide range bars to the downside, suggesting a low is near, well, the VIX having a wide range bar to the upside would suggest a bottom. So it's inverse, but it's in an uptrend. Markets are in a downtrend. Prior resistance is a little further to the upside here. So just keep that in mind. And so we look at these internals and kind of formulate a bias as to a tradable low when it's at hand. That's it. All yours, Dan.
All right. Thank you. Good morning, everyone. Hope everyone had a great holiday. It's beautiful weather in South Florida. And it's very busy out. A lot of locals and vacationers. So, yeah, you just looked at the VIX. We have a bear call credit spread on that. I just recorded a video this morning also of how we use the market internals and the turn in the spiders to short call spreads on this. And we got in a tad early the other day on that. It was Wednesday with the breakout in the diamonds. But this thing, the VXX, the way they're constructed, here, look at a weekly chart here. And as many of you know, I did a phenomenal 4-hour seminar specializing in trading volatility products, options, futures, ETFs, explaining what they are, explaining, you know, contango don't. It's just a matter of what are the future months pricing in relative to, you know, prior ones. It's that simple. Don't get hung up on crazy names. But the way the VIX ETFs are constructed, they're based on VIX futures, which typically risk, you got to pay for risk, right? So future out months cost more. You're buying insurance than close months. And so every rally on this thing, you just then go to your spiders, look for a bullish turn, and we're shorting it. Look, this was $700. This thing is perpetually has to do reverse splits because that's the way they have to roll into more expensive contracts, which depresses the value of this product. So that's the weekly, and you know, so we're just waiting for our turn. We're going to be selling put spreads on the best index ETFs and stocks because with the volatility so high, the VIX, we're getting paid more to sell these expensive puts. So, you know, we've been through that many times. I just thought it was a good little review since we're in the middle of this storm. Well, I think we're getting to be the tail end of the storm actually, but with the VIX this high and the future VIX months being lower, that is saying, you know, the markets are pricing in lower volatility. Actually, I'll show you those slides. I recorded it pre-market, but I'll show you those slides when things slow down, maybe around 10:30 or something. Yeah, Alex, definitely. I typed that earlier when Greg was talking. I'll be looking to short the 233s, maybe 30-minute high, or any other bullish setup in the first 60 minutes. Definitely. Disney here, it's approaching major support on the weekly. Climactic buy setup. It's not ready. I got a lot of Climos in here. I had Whiskey Bravo in here because it was actual relative strength. And look at these multiple supports. So this was the first Climo. Here's a retest, small little breakdown failure, held. If this can, what's today, Wednesday? So I got these holidays mess me up. So this was Monday. If this takes out this topping tail, which is Friday, that's a great put spread candidate. It ain't going down. Papa Mike, it's a Climo, but you know, we need our potent reversal. And I would love to get that new low retest that Greg mentioned. Then that's going to be the time to get. We're going to get bullish this time just for a swing trade and put selling candidates because of the internals. But if we get that nice retest, then we're gonna go in. I'm going to go in a lot heavier on the bullish side, and I'll be giving, you know, trades accordingly. CBS is a Climo, but again, no reversal. These are some of these stocks I mentioned from Barron's that they said they got out of value whacked because they're closed-end funds or whatever. So Monday, look, that had a nice day. Look at this one, was a Climo, had a nice day. CSQ, no reversal. FedEx, I've been watching for a few days. It's not ready. WBA, wow, look at that free fall. It's not ready. INOV, I just kept this on my list, relative strength. Over this tail, over last week's high, looks good. When we get oversold, I'll look for individual stocks, of course, but I might just stick with the liquid indexes. What do we got here? Facebook, we're showing relative strength on Monday, and then it sold off. J&J, I've lost interest in him. NT's has been showing relative strength. Maybe if it chops around for a couple more days. USO, still weak. UNG gapping down a little bit. Yeah, Alex, remember on this gap down day, you and I were talking and you said, oh, well, it might go back to 40. And I said, it could. But I said, Colombo would say the evidence doesn't suggest that. Oh, I had NEM. Remember on my list? Ah, look at this. I said Monday over these highs, and it's gapping over it. So let's see what the sector's doing and what this does. But this looks good for a little put trade. I'm sorry, a swing trade. That's a directional swing. It's a gap breakout. No follow through to this ugly red bar. And the weekly has a little bit of a price or not a huge one, but if we can get a $1.25 out of it, nothing wrong with that. GE still a dog, but let's see what it does here on this other, because it's kind of retesting. If it can break down failure, big bottoming tail, I need a something. Amazon, nice pre-market. This is a nice chart right here. Daily is, still in a downtrend. You're swimming upstream, but I like that pre-market. Let's keep an eye on him for a day trade. Netflix, little breakdown failure here if this bar is real. Gapped up and above. That's a kind of a reverse head and shoulder with a breakdown failure. Apple, still a mess. Intel, nothing. Microsoft, well, that's not bad. So this is what we call a bull gap surprise. Yeah, Alex, that's not a good sign, but they might get it right because of the cooked internals. Yeah, that's so far so good. I like the pre-market. I don't think this tail is real. If it is, it's better. But let me check my put department. I might start nibbling right now. Maybe do a third lot of the 233s expire today. 233. Wow, 52 cents. I like it. I'm going to do the 232s. Right now, 38, 39 cents.